If you invested in the NASDAQ, would you rather grow your money fast or get paid every single month? Today we're putting QQQ versus JEPQ, head-to-head, pure growth versus engineered income. QQQ reinvests everything and lets compounding do the heavy lifting. JEPQ takes that same tech engine, sells upside, and turns it into monthly cash flow. The question isn't which fund is better. The real question is which strategy actually fits your goals in your stage of life. In this video, I'm breaking down performance, volatility, income, total return, and what happens when you go all in on growth versus all in on income. Same market, two completely different outcomes. QQQ versus JEPQ. So stay tuned. Welcome back to Simply Money. Today we're doing a comparison of growth versus income funds, and we're looking at the NASDAQ. We're comparing QQQ with JEPQ. So let's see in our chart which one works out best. If you like this chart, you can get a copy of this down in the link below on the Buy Me a Coffee, the growth versus income spreadsheet. All the spreadsheets that I talk about are typically available there. I appreciate the support. If you find this video useful, if you like it, hit that like and subscribe button. It helps the channel out. And don't forget to share this with others on your social media. So here we go. We're looking at June 1st, 2022. That's when JEPQ came in. So we have to compare from the inception there and kind of go month to month how it's done. We're going to be looking at share price. We're going to look at the number of shares held. And we'll look at some different scenarios. And then we'll look at accumulation stage as well as versus a withdrawal stage. And we'll get into that a little bit more. If you've never seen one of these comparison videos, I have others on the channel and the playlist that you can check out there. So we're going to just start here. We'll start with QQQ as of June 2022. So we're looking about 3.5 years that we're talking. The share price was $280.28. And we're going to come down column B here, month over month. You'll see the change in the price, a little bit of fluctuation here and there. 2023 has started climbing, some little dips along the way, but the last few years for QQQ has been very strong. You can see as we get into 2024, we're up to $424 in April. And then coming to the end of the year of 2024, we're hitting at the $511 range. And going into 2025, it dropped down a little bit. We have the April 2025 tariff liberation day. You can see that it dropped down back to $475, and it has climbed. And now as of December, this is December 1st. I know we're into January 2026, but I just wanted to end it on the end of the year where we were at as the last of December. It was at $614. With this here, we're doing a $50,000 investment on both the QQQ and JEPQ. So you'll see the difference with these two, but they're both investing $50,000. And how would it look? So with QQQ, we're able to get 178.39 shares. It does pay a small dividend. You can see here quarterly, it's paying about 50 cents, 65 cents. Very small dividend, and it's quarterly. So when it gets that dividend, you can see the amount that you received here in column E, $94, $92, $117. We're buying more shares, and then coming to column G, it shows you your total share accumulation as you're adding these, small fractions of a share. We're buying 0.3, 0.44 shares each quarter, so not accumulating very fast in the share count. So we come down to the bottom at the end here, the end of the year. You can see your dividend share per share is 79 cents. You made $144 that quarter off a $50,000 investment, not paying a lot. It's not meant for income. This is a pure growth machine. So you added 0.24 of a share. You're up 182 shares now. You gained 4 shares in these 3.5 years. Definitely not building share and accumulating dividends in that way. The balance on this, now you can see we started at $50,000. As we come down, it's dipped a few times, got down here to 47, back up, got up to 70,000, and it continues to grow. Now, as we're into 2025, we hit 109,000, 114,000. We're ending the year there in December at $112,000. So a $62,000 growth. That's more than doubled in just 3.5 years. So that's fantastic growth. If you doubled your money every 3.5 years consistently, it would add up very quickly. So a growth machine. And, these are great for people who have long-term goals. They are planning on staying, buying, and holding for long term. Younger people who have plenty of time to ride the ups and downs of tech stocks and those ETFs like QQQ, which are high growing, but they'll have big downfalls too. Since this is being shown here, hasn't really had any big drawbacks. 2023, 4, and 5 were all very strong years. So you're not seeing that there, and you'd see some of this even out through a longer course of time as some funds do better in bull markets, others kind of balance out in a bear market. You don't lose as much. You can see a better run of things and a better comparison as we get a longer data set. But for now, this is what we have, 3.5 years. You can see you've gained $62,000. I'd be very happy with that. Now, JEPQ might be geared more for someone in retirement or near retirement looking to shift their funding. And so with that, you can see the start of this of June 2022, the share price was $45. You're able to get 1,092 shares. It's paying a monthly dividend right here starting out is 38 cents, 34 cents. The dividend amount, you're looking at $400 a month, $300, $450. So a very healthy dividend distribution month over month. And you're reinvesting that in this scenario. So here's the number of shares in column M. For the first month, you're adding 9 shares, 7 shares, 9 shares, 14 shares. And here's your new total share accumulation in column N. We'll come down here to the end. You can see as you go down the price range, it had some dips. It dropped down a little bit. But again, just like QQQ, it's been up. It did drop a little bit here in 2024 and then in 2025 slightly, but we're ending at $58.12 per share. That's an 8.33% increase in share price, along with getting these dividends, these distributions. And as you can see here, as we end, we're looking at getting 700, 756, 887 the last 3 months. So some healthy distributions. And even back in May and June of this past year, got $900, $945 a month. So if you were to put part of your income, part of your funding in something like JEPQ, like say you put $50,000 as a portion of your portfolio, you could be generating, $900, $700, $800, whatever it is a month in income supplementing that. And we'll get into that a little bit more when you're looking at withdrawing it. But this is a drip scenario, growth versus dripping and income. Which one did better? You can see with JEPQ, we added 526 shares. So great growth in the quantity of shares you had. Now you're up to 1,619 and you're up to $94,000. So you've increased your portfolio by $43,000. Again, almost doubling. So if you were to separate it from QQQ, you'd be very happy with this. This is a great return. You've almost doubled your money in 3.5 years. But as you can see here in the difference, if it is positive, that means that QQQ did better. If it's negative, means JEPQ did better. So we had one small time frame here that JEPQ did better in the end of 2022. It was actually up $1,000 over QQQ. And then back even further, just starting out at the very beginning, one went down, the other didn't go as much. So you're not seeing a big difference there. So that's negligible with that. But as we come down, you can see how QQQ has really taken off, gaining on JEPQ and got up to $20,000 above it. And now it's sitting, as of this date that we're looking at, $18,000 above. So if you were to choose, say, which one was better, especially if you're just reinvesting, obviously QQQ performed better, but it doesn't mean it fits your strategy. And a lot of people say, that doesn't make sense. Who would not want the strategy of what makes the most money? It really depends on what your long-term goals are, what you're doing, what you're comfortable with. There's lots of factors that you have to consider. So just because one has a total return that's better doesn't necessarily mean it's the one for you. Everyone's different. So I'm going to stop here and say this is not financial advice. This is for information and educational purposes only. And you're going to have to do your own due diligence and make determinations on what fits your goals and your risk tolerance. With that being said, with pure drip, QQQ outperformed in this 3.5-year period, outperformed JEPQ by $18,000 on a $50,000 investment. Both did very well. Now what I want to do is come over here to this side, and here we're simulating that you're having to take out money. You're living on this. So you buy $50,000 of QQQ, you buy $50,000 of JEPQ. Now JEPQ pays a distribution, so we're going to take that distribution, and then we're just going to ride and see how the portfolio holds up. You're taking the full distribution. You're not dripping any. Zero drip. But to be equal with that, we're taking whatever the distribution amount is on JEPQ. So look at row 1 here. JEPQ paid $411. So what we're going to do with QQQ is you're going to subtract $411. And so you have to sell that quantity of shares, whatever that would equal, for $411. So you subtract the number of shares that you had to sell. And then what is the balance based on the new share quantity that you have? And how do we fare one with another in an income stage? Say you're retired and you have QQQ. Would you be better off keeping it there and selling shares? Or would it be better to get JEPQ and just live off the distributions or allow the distributions to supplement your income? Again, I don't recommend putting all your funds in any particular ETF or stock. I like QQQ, I like JEPQ, but perhaps you put some in each, and that's diversifying. So you do have some growth, and you do have some income, and you have to find out what works for you and what meets your goals and your expectations. So with doing that, we're going to just kind of skip down here. Looking at column U, you can see that positive again means QQQ still has a higher balance. You can see that typically QQQ is doing better at a small phase here in 2022 at the end of the year that JEPQ pulled ahead a little bit, but then QQQ takes off and begins to do better. As we come down to the bottom of the time frame, let's kind of go over some of what's happened. With QQQ, you've had to sell out 53 shares to simulate getting the same amount that JEPQ is paying. Over here, JEPQ has paid you $21,000, so you've had to sell $21,000 worth of shares. As its dollar cost averaged out, that's worked out to 53 shares. So now your total share is down to 125 shares on QQQ, but your balance is still up $27,000. You can see here in column R at the end that you've taken out the $21,689 in income, but you still have an increase of $27,000 in your portfolio. With JEPQ, we're in the other scenario, we were reinvesting these distributions and they grew because you were growing your share quantity. Here, they're not growing because you're just taking the distribution, but your share price did go up, so you had an increase of $13,505. You're getting this, you didn't have to sell any shares, and you're gaining both market value increase and getting the distribution. But at the end of the day, even taking the income, even selling shares with QQQ, you're up $13,522 with Triple Q. What are your thoughts? Do you own QQQ? Do you own JEPQ? Do you own both of them? I like having growth and income. For those that follow my income portfolio, when I share that and give monthly updates, you know that I have QQQI, I have some JEPQ, I have SPY, I have Chippy, I have several income producing funds. I have a little bit more what we'd call stable SCHD. It's a growth income. So I have income. It's not high. It's not a high yield, but it is growing, and that CAGR is growing. And I have that. But I also have a growth portion that I don't show on here. My channels focus more on the income portion that I share. But I have a growth portion. I have funds like SCHG to help continue the growth factor. And so we each have to make our own decisions What are your thoughts on this? Do you like seeing these comparisons? Are there some funds you'd like me to compare? You compare QQQ with QQQI, and there's lots of different comparisons you can do. What funds would you like to see compared? And leave those down in the comments below. This is QQQ versus JEPQ. Give me your thoughts on that, your feedback. I appreciate you joining me, and we'll see you next time on Simply Money.